Good morning. Steve Reed in Chicago with the morning grain comments. Prices in grains are higher overnight, led by wheat. Wheat might be adding some premium in the marketplace because of the Ukraine war continues. President of Ukraine will be addressing UN today for more help, and there is talk about more sanctions against Russia because of war crimes. We also note that yesterday USDA rated the U.S. winter wheat crop 30% good to excellent, versus 40 expected and 53 last year. It's the second lowest crop rating to 1996 since they started rating the crop. There is some people that think that especially Kansas and maybe eastern Oklahoma, eastern Texas crops have improved and are better than the ratings suggest, but the April and May weather outlook for the western part of the hard red winter wheat area is warm and dry, and that will expand further east in May. We also note that we could see at least maybe 5 to 10 million tons less wheat out of the Black Sea, and maybe 5 million tons less wheat out of Europe, which would begin to offer some support to global prices. We also note that USDA later this week will have a S&D for wheat, not expecting much of a change in U.S. carryout. USDA won't have a May 2023, 22-23 supply, will not have a 2022-23 supply demand until May. In the corn market, we're seeing some premium added after China bought 1.1 million tons of U.S. corn. There is rumors that they have also bought 2 to 3 million tons of U.S. corn that might be announced either late this week or next week. That could begin to talk about a little bit better corn exports than what the USDA is saying, and a little bit lower carryout when it's all said and done. The trades will also be watching the lower corn acres, and a yield below 175 next year would suggest D's corn could test $8. I think that we'll be watching pretty closely the growing season, because our weather guy still contends that the western corn belt will see above normal temps and below normal precip this summer. Currently, it's too wet in the Delta and parts of the eastern Midwest, and so that might delay corn plantings there. As far as the bean market is concerned, China's on holiday, and we expect them to come back and start buying U.S. soybeans as soon as Wednesday. FOB prices in Brazil are competitive until August, and then they are above U.S. with no FOB offers September to January of 2023. And we'll also be watching soybean oil prices as sun oil and canola oil prices are reached $1 per pound versus our futures market near 73. Crude oil is trying to bounce back on this sanctions talks, and we'll just kind of see how that impacts the commodity flow of money into commodities. As always, this is my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.